Ish.
All right, thanks, Ish. So we're here, as you said, Shay Patel, CEO of Delphi Markets, Dan Schwarz, and Dan Reyes. Dan Reyes, I'm going to have to use last names here because you're both Dan. Just why don't you give us 30 seconds to tell us, since these two have already spoke, so tell us who you are just real quick so the crowd knows.
Yeah, no problem. My name is Dan Reyes. We run a family office. Used to be a hedge fund. We closed that down around 5 years ago. We're just trading, all basically the people that are in the family office, their money. And we trade equity options. So we're looking at the predictions market because we see a lot of correlation, what we currently do. We think it moves first, right now at least it's moving first, and it could, give us some good trades on, how we currently trade.
All right, very good. So we'll just jump into it. I've got a few questions here, and I'm also going to try to leave a little bit of time here at the end to see what the crowd questions as well. But any of the three of you or all three of you, where do you think prediction markets are currently underdeveloped? Because we've got a lot of developers in here, guys that you're doing incredible things, traders, market makers, data aggregators. So there's a lot of development going on, but where is an area where you think prediction markets are currently underdeveloped that we need more infrastructure?
Liquidity, I think, would be very nice across markets that are not like sports or crypto. I think for those guys building in the space, if you get into those other markets, it's a bit of a chicken and egg problem. For people to be incentivized to trade, there needs to be other traders. So if you guys just want to take that leap of faith and just go, I promise there's going to be more and more as the industry grows. So I think liquidity across all these different categories would be quite cool.
I mean, I would say there's everything about prediction markets is underdeveloped, and liquidity being the starting point. But at least we have a lot more liquidity than we did 6 months ago, or 12 months ago, or 18 months ago. So it's trending in the right direction. For you, Caleb, I think media is extremely underdeveloped in the prediction market industry, and that's something that we're learning a lot about today. That's significant. Institutional investors, I think, family offices, and how the more mature financial community thinks about prediction markets. The fact that you're here means you're still quite early, even though there's all these headlines, there's all this new liquidity. You're still very, very early. People have said this is kind of the first chapter. I'm kind of curious to hear your thoughts on how a family office considers prediction markets.
Yeah, we hope we're early, right? I lived in Puerto Rico for 14 years, so I had access to a lot of deals in Bitcoin, right? So I was in Bitcoin probably I think in 2016, and this reminds me a lot of those days. I do think that this is going to have a lot more legs than crypto, right? Crypto, we knew from the beginning it was like 99.9% of it was going to crap, So I look at this a lot different. If you look at predictions, they've been going on forever, right? They've been going on for thousands of years. People have been predicting things. So I do think we're in the first inning of this 9-inning game. I think it is underdeveloped. I mean, for us, it does. Somebody said it in one of their other speeches. It's like, if we don't have margin, right? If we can't get more leverage on our money, it's difficult to take the money that we're currently getting a good return on and, putting that to work when we can't get margin. We know it's coming. I mean, we deal with other firms, pretty big firms that are working on it already. So we're saying, hey, this is a good place for us to start. We think we are early. There's some big players in it already, but we think we're early enough that we can make a difference, within the next few years. And there's a window of opportunity, for hedge funds, family offices, smaller ones to, I think, do exceptionally well over the next few years.
Yeah, absolutely. And I mean, that's just one step, as you were saying, as a part of the solution of liquidity as well. And I know you mentioned with me, Dan, it's like, I think someone earlier in the conference had told me, I hadn't spoken to Chris Gerlacher yet of PredictionNews.com. And they're saying, oh, isn't he your competition? I was like, no, because if you Google sports betting news, which is my background where I initially came from, there's 100 sports betting news websites and tons of media coverage around it. But you Google prediction market news, and you're not even getting prediction market news websites. You're getting Kalshi and Crypto and Polymarket.com and their platforms. So it's like, I think that's another area to solve the liquidity, is to bring more people in, is information around it as well. The next question I got here is, what do you guys think, and we touched on a little bit as we have all different people in the room, but also people outside of this room, what do we need to do to better build public and consumer trust? Because, it's in the headlines. We only see the negatives. We see, some of it's funny. I think we were joking with I was joking with someone about the guy in France that, went and put the blow dryer and made his own market by altering the temperature reading. But we see a lot of negative news. I don't think we're seeing a ton of positive news. But even outside of that, how do we and how do you guys, with what you do, build more consumer trust? Because I think that's a big piece to bring in more people.
Well, one thing is that I think at least twice in this conference it's been pointed out that most consumers of prediction markets are not bettors. They are just going to these websites and they're looking at these probabilities and they're learning from them. And that demographic has been sorely neglected. As you can tell, for example, if you Google prediction market news and you click on one of those websites and you just go to a call sheet or a polymarket market and just look at what's on that webpage, it is not good. It is inscrutable. The questions don't really make sense. There are misleading comments or no comments at all. There's no, if you want to learn about the Strait of Hormuz, just going to that polymarket question on it tells you almost nothing. There's kind of a mysterious probability there. The whole consumer side of the information that is coming out of prediction markets is completely in its infancy. It's not even really a priority, it seems, for polymarket and call sheet. And since we live in a duopoly, the decisions that those two make on their websites matters quite a lot. So I think as other players come in and build more scaffolding around those questions that is trying to answer what is actually going on in Iran. That is what most people want to know from the prediction markets is what is this telling me? You know, we had that mathematical talk earlier today about the Shannon entropy and information. Prediction markets are producing a novel form of information that family offices and the news media and politicians and academics are all looking at for the first time, but it was not designed for any of them. It's designed for the gamblers, and then as a side effect, we're getting this novel, powerful source of information. As people start thinking about that side more, I think prediction markets are going to get a lot more interesting.
I think that's a really good point, because if you go on to call sheet or polymarket when they get an app and stuff, I think as a retail consumer, your first instinct isn't to go to these weird markets like Strait of Hormuz and go place a trade on there, because that's just not something you're used to. You're gonna go to sports because there's a billion other sports apps, and that's the easiest category. You don't even have to think about it. I think the place for retail and consumers is in the price is the product. I don't know if they'd be best suited to be trading in a wide variety in all of these markets when they have no experience in a lot of these categories. There's going to be experts in geopolitics, and they should trade geopolitics. If you're not an expert there, you're going to get destroyed in that market. However, you can use that probability and that price a lot more than you'd be able to trade it yourself. So I agree with you there.
So I do see a lot of correlation, like I said, with the crypto market. If you look at the people, go back 10 years ago, to the big hedge funds on how negative they were on crypto. You look at their comments now, they're building crypto funds, ETFs, they're super positive. They changed their tune when they said, oh, hold on, I can make some money at this. And I think what I see is I do see the bigger firms getting into the predictions market sooner than they did crypto. Crypto, they looked at it like, hey, this is, they're buying cocaine with it, they're buying all these drugs with this stuff. They didn't want to be associated with it. Now, all the big firms are doing it, and I think you're going to see that earlier in the predictions market, which is positive. But we need good information, right? Positive information, things that are actually happening. Like you said, all the negative stuff, it's just noise. You got to do away with a lot of those things, because there's one story that's horrible and there's 500 that are great, but that doesn't sell the news. So
Yeah, and that kind of jumps right into my next question. What do you guys see? Because we're all prediction market people here for the most part, so it's been all positive, and obviously that's how I feel about it as well. But the reality is, just with anything, there's always risk. So what do you guys see as the biggest risks in this space right now?
regulatory, right? Regulatory. That's crypto was, same thing, right? It was regulatory. It was, I couldn't even, I don't want to say on camera where I bought my first Bitcoin, but I'm like, I couldn't figure it out, right? Everything has shut me down. I put my license on there. It didn't let me do it. I'm like, how the heck do I get around this then? So even though, I think it was, it's the guy, the herd is coming. The guy that always said the herd is coming from Galaxy Digital. Mike Novograph, he always says the herd was coming. The herd won't come unless there is regulation, right? As much as, and I was a crypto guy back then, is like, you don't want it, but at the same time, you need it to grow, right? And without that, it's going to be very difficult for it to take off. I think once these politicians figure they can make money from it, they'll start supporting it. Because that's the way politicians are, unfortunately, right?
I think that's also good because like once more institutions see like regulation, like there's certain institutions that are just going headstrong into it because they see the opportunity, but a lot of institutions have to wait for like the proper regulation for them to be comfortable. Like they're very like risk-averse institutions, like such as like banks or something that are just waiting and just gonna let it settle first, and then they're gonna go once it all gets regulated.
Yeah, I think that's right. And one way to think about the future of prediction markets and that risk is that it's a race. Right now, there are legitimate harms. The insider trading stuff is overblown. There are harms there. There are crimes there, as the previous sessions discussed. I don't think the actual magnitude of those crimes is very significant. But just the gambling addiction and prediction markets being used by children and just predatory practices that are getting people bad deals and just people just losing large amounts of money, which is another thing that came out of one of the earlier talks today. These are real harms, and we need the positive things to exceed those harms sooner rather than later, or consumer sentiment might slowly turn against these things. I mean, people don't want to see 100 million ads for DraftKings all over their TV and just see it all as just this degenerate, abusive thing. We need things that are positive and constructive coming out of it. We need the institutions, we need the regulators, we need everybody to get on board and make this thing actually useful and valuable and professionalized before it is forever branded as this kind of a degenerate gambling thing.
Okay, moving forward, trying to build off each other here. So I know we've talked about liquidity and a couple other things, but like when we're looking at someone that maybe there's someone that has a lot of money and can do high volume trades, or maybe it's just your simple user that wants to get on for the first time. What do you guys think the biggest friction point is for new users? What is keeping people from getting into trading?
Well, a lot of people don't know, like, the beauty about like Robinhood is they make it very easy. It's just like you just go, it's very frictionless. You just like click the buy button. This like I was trying to explain to like my mom how to trade on a prediction market, and it was so like what's an order book? Like what does this even mean? Like it's very like I think we're in a bit of a bubble in this space where everyone here just like knows what prediction markets are, how to trade them. That concept to like the outside world of like just the mere fact that the price is the implied probability of the event. Like, try explaining that to your grandma. It is very difficult. You can't do that. So I think it just needs to be like a lot. I don't know the answer to it, but we need to make it a lot more intuitive for everyday people.
Yeah, I definitely agree with Shay. I mean, with the prediction market that I built inside Google, when I had my first version of it, I just put it in front of as many people as possible. I said, what do you think this is? Like, what do you do here? Why would you do it? And yeah, the lack of probabilistic thinking just kind of broke my brain. People would say things like, well, this is going to happen. And I would say, so you think it's 100% likely? They said, yeah, no, it's definitely going to happen 100%. Like, so you would bet 100 to 1 odds. And then they're thinking, would bet 100 to 1 odds? I'm like, can you imagine a world where it wouldn't happen? No, it's impossible. 100% it has to happen. There's some flaw in your system because it says something other than 100%. Yeah, just the number of conversations like that. Yeah, to your point earlier about the adoption from the sports betting market, I'm not much of a sports person. I'll bet on a chess match. Sports is one of the areas in common culture where probabilities are generally understood. The idea of there being a line, or the idea being there's multiple outcomes and I'm trying to figure out which one of them is more likely, people do intuitively think like which team is more likely to win and why. That doesn't mean they'll always bet that way. They'll probably bet for the team they want to win, or they'll hedge or something like that. But you can at least start to think probabilistically. And then if that probabilistic thinking in your mind is turned on, then you could look at something else and you can see something that says 38%, and you can kind of think, what does that mean? Now you're on your path towards being the type of person that would come to an event like this where it's kind of in the water. That could be an on-ramp for a whole ton of people. So yeah, I'm very mixed with the sports gambling. The downsides are very annoying. The ads are super annoying. That kind of the value coming out of it to me seems like a big zero-sum game. But if it gets millions of people to think about probabilities, like humanity will just be smarter as a result, and I think that would make it worth it.
Well, I think the barriers of entry in the beginning for people like us is good, right? You don't want to make it super simple because then everybody jumps in it. So I do think, with Polymarket, you have to have crypto, right? I think Kalshi is winning definitely the media war, right? Because they're all over the place. I mean, there's been other places that you can bet on sports, but, Kalshi came in and they kind of seems like they took over, at least, their name has taken over. So over time, it will get easier to sign on to these things, just like Coinbase was difficult in the beginning. Now it's super easy. So those things will just start evolving a little bit more with time.
Yeah, I mean, I agree wholeheartedly. Did you have something else, Shay?
Yeah, I was just gonna say, I know sports betting, like, yeah, you have like the American odds, but I would, at least from my personal experience, I have a lot of friends that, they bet on sports and they're doing all this. Like, I would, I would want to see if they know the equation to turn American odds into a probability.
Oh, I get that wrong all the time. Yeah.
Because I don't think a lot of people do actually. So I don't like it might be probabilistic, but it's not like intuitive to them. It's just like, oh, like I've bet like plus 250 so many times. You just know it's gonna what the payout is. But that like so what's the implied probability be there? Yeah, they probably wouldn't know it.
But that's one of the beauty about as much as I complain about the first time user experience on Call.Sheet and Polymarket, if you go to that same thing where the line is 250 or something and you see it on Call.Sheet, it will be expressed as a probability. So you're immediately forced to make that translation. You say like, 80% likely, is that right? And again, that's step one on your journey to thinking about it.
It's also interesting there because I bet if you go to like DraftKings or like all these sports books and you expressed it as a true probability, a lot of these users are gonna be like, yo, this doesn't add up to one. Like, what's the vig here? The juice is insane. So maybe it's like that's the reasoning for that, and that might like be honestly like a double-edged sword in terms of prediction markets, where like if market makers are taking a spread, it'll look a lot more obvious than a traditional sports book.
Yeah, I mean, and I would agree with that wholeheartedly. I'll tell you, like, one of the things that we're doing at TradeHandle as we grow and develop is, and I've talked to some other people that are in the prediction market news side, which is very few, is just the guides and the understanding, because I think, like you said, a lot of people can sign on to a sports book, and it's a lot simpler to them, especially if they know sports, whereas, you sign on to Cowsheet for the first time, and you're all, like everything you guys have said, it's like, what is a probability? What is implied odds and those type of things? So with that, now that we've addressed, the friction point for potential new users, who do you guys see as the next wave of users? I think we've had some people touch on it a little bit. I know the Cowsheet girls are up here talking about, getting more women involved. But as a whole, I know right now the market's dominated by sports, volume-wise. My personal belief is that's going to change in the years to come, and maybe sports will always be a big piece of the pie, but that piece of the pie is going to shrink. So who is our next wave of users and traders for prediction markets?
I think the next wave of users is like when you look at like stocks, and I think I've spoken about this to a few people here. When you think about stocks, like the intrinsic value in like a stock is that you're buying a share of a company. It actually like it represents something, and so then you can have like these like buy and hold kind of people, and that's like a big part of the market, like a pension fund where like for prediction markets, I think the next wave of users comes for people that are able to derive value, such as like a manufacturing company hedging their supply chain risk with prediction markets, and you can get a lot of just like I think hedging is like the next wave of users, and once that falls, then naturally that leads to other categories getting more liquidity, and I think you've kind of solved a lot of the problems in the space already just with that.
I still think retail for now. I mean, it's going to be hard for especially some of the big firms to get in because of the regulation. They're afraid of it. I think it's going to be solved, probably quicker than most of these things. The new administration, the administration that's currently in, kind of moves these things pretty quick. So I think for the valuation, I think it's nuts. But the $22 billion, somebody knows something, right? It seems like I'll be willing to take that bet, I guess. That it's going to get approved and it's going to be okay. I mean, Las Vegas, I would say it's illegal until the government can make money from it, right? Like gambling was illegal. They said, hey, well, we could tax it. We're going to make it legal. Marijuana was illegal. I'm against these things, but like I said, hey, we can make money from it. We're going to make it legal. We're going to take money from it. As long as they're taxing it, they're going to find a way to make it legal because that's the government's, lack of a better word, fuel, their drug. It's tax dollars. So if they see this business as being, $1 trillion and they can tax it, they'll make it legal.
In terms of which segment of retail, yeah, I think I agree with you. Retail will probably continue to grow very quickly. The institutional, we're all hoping for it. We're all expecting it. It is growing, but it's going to take some time. Within retail, I am, struck by the history of prediction markets with the Iowa Electronic Exchange being one of the only ones running for the longest time, and election odds are also not super interesting to me, like in terms of prediction markets being good for humanity. But people love betting on that stuff, and I feel like that could grow 10x very easily. And then the Hollywood Stock Exchange, the other one that just really had like a ton of retail interest for a really long time. People love betting on the Oscars, and they love betting on Netflix streaming and Spotify playlists and things like that. So again, not very useful, but maybe as a good on-ramp for people to prediction markets are things related to media and entertainment that could grow very quickly. Personally, I'm here for forecasts on AI. I want to know when artificial general intelligence is coming. I want to know what the next models can do. I want to know when there's going to be mass technological unemployment. And I'm still waiting for really good markets and really good bets on that. But getting all of those people to start betting on the future of humanity, I want to predict the next pandemic. I want to know when the next cancer drug is going to come out. Like, that's what I'm here for. I'm still waiting. It's getting there. It's getting there.
So then, what do you think of in like November? You said like political betting and like political prediction markets. What do you think is going to happen, and how can like the community make sure that it kind of takes off and we see another new high?
I don't know, but I'll tell you what my wish list is. So in the, any sort of U.S. political thing, whether it's midterms or presidential elections or even gubernatorial races or California ballot propositions, there's some major election, there's some odds, it's 40 to 60%, it's fluctuating, it's like, oh, the odds went up, the odds went down, I'm just falling asleep. The thing that would be most interesting to me is the conditional market. If the Democrats win the Senate in 2026, what will GDP be the next year? If this person wins the gubernatorial race, what will the ballot budget be? The budget of what am I trying to say? Will the budget be balanced? There we go. And if this, bill passes, then what will the impact on the industry be? Like, will it grow? Will it shrink? That is way more interesting as a consumer. Like, I want to know what the impacts of these things are. I want to bet with my friend about why somebody should be elected or something should be passed, not just will it. And I think those questions are hard to predict. Conditional questions are hard to resolve. There's a bunch of barriers. I mean, it really just makes it harder for the bettors. But for the consumers, when I'm looking at the news, if I can see, people are saying based on this thing, that if this person gets elected, it's going to tank like the firefighters union, that's newsworthy. Like, that's interesting. People would love discussing that. So again, on the kind of the consumption side of the news that it comes out of the prediction market, as long as you can get the bettors to bet on those conditional outcomes, I feel like that would just be endlessly fascinating.
Do you not think that kind of like, I forget who it was Soros, his theory of like reflexivity, it would make prediction markets like have that trait, right? Like in like stock markets, like if I just want to like drive the price of a company like stock up, then now they have more, like they can make more moves, they have more capital, and then like they do better in like as a result of that. If voters see that, oh, if the Democrats win, then this is what the cost of gas is going to be. Now I'm like, wait, maybe I won't vote. Like now you're actually impacting how the election can go. Whereas like, if you actually saw just the pure odds of like, I don't know, like a sports game or the election itself, it's probably not going to change how you're going to vote.
Yeah, well, to your point about hedging, I mean, I remember when Kalshi was getting started in 2020, I think it was 2020, when they were first talking about their business model was hedging. I mean, it wasn't supposed to be a sports gambling website. It was supposed to be for you. It was supposed to be a way for somebody to hedge some sort of risk or to get something on top of the equities market. And I think that will happen, and it is happening. It's been a little bit slow. I think the conditional probability markets or other kind of esoteric derivatives have much more potential to like directly impact people's decision making. They do have potential for abuse. There's more insider trading things. There's more like actually affecting the outcomes, not just being a spectator. To me, that's all positive. Like, that makes the prediction markets useful. That means humanity's collective toolkit is helpful. Like, this is why we have finance, is because it's decision relevant. It allocates capital. Like, to me, these are all good things. There are definitely going to be huge regulatory problems. There are problems on the betting side. There are problems on the market making side. There's problems everywhere with realizing this, but that's the dream. Like, if prediction markets can actually be useful in that way, I mean, that's why I'm here.
I guess that makes sense. Like finance, like trading, you can think of it as zero sum, but because these assets have like fundamentals, it's not. So that would make prediction markets have like fundamental like value instead of just being like a speculating thing.
Yeah, compare the stock market to like the NFT market. The NFT market, like people do have financial stakes, like there is an allocation of capital thing going on, but mostly it's just a big game. The stock market is about the products and services that we all use every day. People work at these companies, like people's retirements are tied into these companies, like it has stakes, it really matters. And I think that's good. Yes, there are downsides to that too, but it's primarily a good thing. I want prediction markets to be more like the stock market and less like kind of just random NFT, like how much is this ape worth?
Yeah, I'm all for it. That makes a lot of sense.
All right, well, the last question I've got, and then we'll try to have a couple minutes if the crowd has any questions, since this section is titled Future of Prediction Markets. I won't give you the exact year. We'll say 3, 5, 10 years. Like, choose the number you want to say. Where do you guys see prediction markets? Like I said, 3 years down the road, 5 years down the road, 10 years down the road. Choose your number and share with the crowd where you see it. And you can touch on any point. I mean, I know it's a wide-ranging question, but I wanted to leave you some room for where you guys think you see things going.
Well, I have an easy answer, which is talking my own book, which is I believe these prediction markets will be primarily traded by AI agents who are just much more accurate than human traders. And it might get much worse for human traders already struggle. You know, if you sign into one of these things and you make a bet, as has come up many times during this conference, you're always worried that your counterparty like knows something that you don't know, or you might just be betting against one of the great predictors who makes $1 million a year, or you might be betting against some family fund that is putting like serious resources into these things, and you have this adverse selection problem. This is going to get much worse as very smart AIs are going to be figuring out things on these markets, and the humans are going to be thinking, how am I supposed to beat the Terminator? The Terminator is here like researching everything, it like knows everything, it's this omniscient AI, it wins everything, and that's who is betting against me. Can I really beat them? Again, I think maybe most bettors really don't care about this, but it's something that you might have in the back of your mind. But I think it is almost inevitable. Like AIs will just be better at prediction markets than humans, and so they're definitely going to be some significant portion of the trading volume.
I think the AI will be like the casinos, right? People think they could still be casinos. I still think, humans are still going to bet because they're going to say, hey, I can outsmart this AI, for now. I think they're going to do that. And it's just sports, especially, it's just emotional, politics, emotional, so I still think you have a lot of human interaction, I believe. But I do think in the next 2 years, we'll see some type of regulation pass, that's going to be a lot smoother. I don't think it's going to drag much past that. I think the administration will be afraid of letting it go farther, to another administration. So I do think, we'll see some positive news in the next 24 months.
To be honest, I don't know where the space is going to go, but as like an optimist and as like speculator, a former trader, like I see it getting very widespread if used correctly and not in just like a gambling fashion. I think we could genuinely see this be like the biggest asset class in the world. I see so many use cases, and I learned about so many use cases just by speaking to more and more people in the space. I have my own opinions, but like every day that I speak to someone new, I'm just learning about new things in the space. So I think there's a lot of just like untapped potential, and we just kind of have to work together and like crowdsource all of our opinions and figure out where the space is going to go.
We got about 5 minutes. I promised Ish we'd get out of here on time. Does the crowd have any questions?
Yeah, I mean, the talk that was full of math this morning referenced that paper on automated market makers from 2002. This idea for decision markets might even be in that same paper. It goes back a long time. So for people who have been following this, I haven't been following it for that long, but around 2010, 2011, I started getting turned on to these ideas. Yeah, like it's very exciting. It's coming. I think there's many barriers between now and the decision markets that you're reading about. But like this is the dream. Like the people who invented this stuff, this is what they wanted from it. And there's every reason now to believe that this will happen. As a forecaster, I would not expect any major prediction market to have something like that within the next 12 to 24 months. but it's at least much more likely to happen now than it was last year or 5 years ago. And I think to the humans who think they can come to Vegas and beat the casinos, which again, that betting psychology is, I love betting, I love gambling, I love playing poker, but I always feel like I need to have an edge. The mindset of somebody who plays a game where they just know for sure they're going to lose, at least an expectation, I never have totally understood it. But this is maybe the dream. You have a bunch of humans that treat it like Vegas. They bet because it's fun.
I don't bet. I haven't spent one penny.
You haven't bet
gambling.
one penny? How about your family funds money?
No, neither. I haven't. I've walked through the casinos, and that's it. I haven't even stopped at a table.
Yeah, there's many different forms of gambler psychology, I think, that lead people to do that. But the dream would be there's millions and millions of people that are gambling for fun. Like, they know they're going to lose on average, but it's entertainment. It's like buying a movie ticket. You come out with less money than you went in, but you had a good time. It's fun. It's entertainment. Those people are basically subsidizing the sharks, which are going to be primarily AIs that are actually like taking that money and restoring the right market value. And then the outcome is that we have this oracle that tells us the future that all of humanity can benefit from. So it's all coming. It's all on its way. We have like a lot of the pieces now that we didn't have a few years ago, but most of those pieces are still ahead of us.
I think we might have time for one more question.
I think the role of academia, like, definitely, like, it plays a big role. Like, if you think about how, like, the S&P 500 got really, really big, it was like in newspapers as an index for like just regular people to understand how like the stock market works or what's going on in the stock market, like the broader U.S. economy, instead of looking at individual stocks. And then like some research started getting done on like the S&P 500, and like Fama French 3 came out, and the capital asset pricing model came out, and that sort of established it like in the institutional space and kind of like flowed back from there. So I think I don't know what's going to get published, but when it does, I think it'll help institutionalization a lot.
Yeah, I think academics in general are very sore about the whole prediction market space because they figured out all of this stuff decades ago and nobody paid any attention to them. Yeah, from the history, yeah, like Fama and French, I'm not exactly sure the order, the chicken and the egg between the development of these things. I mean, the options markets were created before anybody figured out Black Swan, right? Like the first people created the derivatives. And I think Alex Tabrock had something about life insurance. For like 50 years, the US and the UK were offering life insurance, but nobody had ever calculated what a good price of life insurance would be. And then the people actually sat down and figured it out like many decades later, and then the prices started reflecting that. So there is some practice of, like, the markets come first, the betting happens, and then some people later figure out all the math behind it. In this case, all the math has been worked out. Like, I think we all know what the properties of the market makers, the right market structure. We know the dynamics about the sharks and the fish. You know, there's a paper from 1992 that is analyzing, like, when bad predictors enter a market and the sharks try to go after them, like, what is the dynamic? And does adding noise to the market make it more or less accurate? This has been worked out for a very, very long time, and academics have just been sitting there, like, drumming their fingers, being like, hello, we figured this thing out. Prediction market, yeah, decision markets, this stuff works. We've proven it. We've run the experiments. We've shown that it works. And now Polymarket and Kalshi, I think, I don't want to say bad things about them or any more bad things about them, but they generally have not been following any of this practice. I think it's more conventional financial development where they're building something that is good for their users, and then as kind of an afterthought, they're thinking about what the academic literature says about this. Still, just the fact that there's this much attention and academics have had a role in the past, I think things that kind of academics give the credibility, which brings in the institutional investors, like that sounds like that will happen. But man, I'm telling you, I'm tired of reading prediction market papers. Like, they figured it out decades ago. Like, the academics did their job and nobody listened to them. And now we have the thing and they're still not being listened to. Man, if I were some grad student and I was like, oh, prediction markets are hot, I'm gonna write my thesis on this, and then you just read the literature, you'd be like, what am I supposed to say about this that hasn't already been said? Maybe you could use, there's more data now, right? Like Polymarket and Kalshi have millions of bets. So maybe you could do an empirical paper and learn something about gambling psychology or what markets are interesting, or if somebody starts betting on sports, do they then go to politics or do they just stay with sports? Like maybe you can answer questions like that. But man, yeah, I think the academics are quite sore on prediction markets.
About the psychology thing, at Delphi, we store like RFQ data. And so for those of you that don't know how like the RFQ system works on call sheet, every time you like add a leg and then take a leg away, like a message is getting sent to these market makers. So we're actually able to see like how people construct like parlays and combos, which is really, really interesting because it's like literally like the order in which they structure, how long they spend between each thing. So psychology is one thing. Then also like when you have a lot of these like really, really niche markets, you might be able to find like some pretty cool correlations. Might be a bit hard just because everything's between like 0 and 1, but like you could say that Bitcoin is correlated with the Seahawks winning the Super Bowl. But like if you do it right, I'm sure there's going to be a lot of like cool correlations that we figure out just with like the world.
Well, guys, I think that's going to be it. I'd like to just remind everyone, I know it should share, like, we all get access to videos from each session.